Hello, folks. Welcome to Pro Trader Strategies for Monday, June the 28th. We're an educational company, and we're here to teach you guys how to trade options and talk about the markets during all that. So if you're newer to this video series, please hit the subscribe buttons because you'll get access to all the daily market commentaries. I do these every day where I talk about the markets and my trades. Also, smash that like button. It really does help us out. And if you have any questions throughout this video, please throw it over there in the comment section. I'll be keeping my eye on that. And I'll circle back around a little later today to see if anybody else is throwing anything over there, because I want to make sure you folks are clear of concept before we move on. So in this video, we're going to be talking about those trades that I've done and some of the markets, what's been going on with the economic data. And I'm Eric Wilkinson. I'll be your host here for the next 15 minutes or so. You may recognize me from mainstream media as the Wolfman. All right, so a lot going on today. We've got crude oil coming off a little bit today. It's pretty light early on this week for economic data, although we have every Fed governor speaking. It seems like we've got Williams, Balkin, Bostic, Quarles, just about everybody speaking almost today too, today, tomorrow, and Wednesday. And then that's when we start getting our economic data. We're going to be getting consumer price index. We're going to be getting, which is the CPI. We're going to get some Chicago PMI numbers, pending home sales later on. Finally, on Friday, the unemployment numbers. So keep your eyes out for that. That is the first Friday of the week where we get the unemployment data. So pretty decent week for economic data. Now it's going to be a bit of a balancing act here, folks, because we have the 4th of July weekend coming up, and this is going to be a week where a lot of people will probably be taking off. So market driven by economic data could be a little bit more volatile than normal with those with the slightly less volume coming out in the overall markets. All right, so anyway, there we go. Let's change this up a little bit, see if I can figure out that's what I want to do, is get to these markets. We can see crude oil coming off here today throughout the day. It's seeming like weakness across the board in the energy sector. If we're looking at like XOM, XOP, Devon Energy, all of those energy related names are showing some weakness today. We've got bonds moving higher by a full point on the day. Banks aren't looking great though, despite the fact that we're seeing interest rates move higher in the past months or so. We saw that big move with the banks. Now they're starting to see some weakness here. It could be because the overarching theme here is the Fed really isn't going to be raising interest rates in 2022, and they'll probably start the slowing down of asset purchases at the beginning of the year and ramping that back, or pulling that back, slowing those asset purchases throughout 2022, and see how that shakes out in the overall markets. All right, and then gold really unchanged. We found it right here at this point of control, value area low, is building a point of control there. So we are getting a little bit of time and volume accepted at these levels right around this 1780 area that we're currently at. So are we going to be able to get a move to the upside? The strength in the dollar lately has been causing a little bit of weakness in gold there. Bitcoin moving a little bit higher here. Something to talk about here. Binance, which is the largest crypto exchange, got banned from the UK. All right, so that's the headline number here, folks. The FCA, which is the Financial Conduct Authority, is the governing authority in the UK. All they said was that Binance could not have an exchange in London and have it regulated by the FCA. So how does that affect everybody in London? Well, it doesn't really. What happened with Binance was they started in Malta, moved to, I believe, Grand Cayman, so people can still use the exchange from the app, even if you're in London. It just means they can't have a physical exchange in London. It's really all that amounted to. So earlier we were seeing some real weakness in the cryptos because the FCA saying they can't regulate this asset kind of takes a little credence away from the cryptocurrency, is what a lot of broader thesis was about that. But at the end of the day, the people that love crypto are going to find a way to trade it, and it doesn't really affect those folks in London, really. All right, real mixed bag here overall today. We've got the NASDAQ up almost a full point on the day. Like I said, we're seeing some weakness across the board in some of the aspects of these sectors, but the tech sector is doing very well. We're seeing just about everybody across the board. All of my bull setups that I was kind of flipping through today were looking like they were all tech sector, or where we're seeing Zoom make some moves to the upside. Apple, EA Sports, all looking very bullish. That's the tech sector. On the flip side, the energy, retail, and travel and leisure, for the most part, looking pretty weak. As we can see here, the Dow Jones Industrial Average down over a half a percentage point, 225 points on the day, and right now just below this 50-day simple moving average. You've heard me talk about this time and time again, folks. Above the 50-day simple moving average is giving us a bullish trend there, and once we get below that, that starts looking very like we've broken into a bearish trend. So a settlement, not just breaking there and testing it, really a settlement below that area is what one would be looking for a technical setup to the downside. Real bearish pattern here with this red engulfing pattern. Even if we finished at the highs of the day, folks, that would still look like a bearish signal. I'm telling you, just even a green candle finishing at the highs is going to look like a hangman doji and look like it wants to roll over. Now, having said that, it would have settled above that 50-day simple moving average. We need that confirmation before we really start adding anything to the downside. But like I said, across the board, travel and leisure, retail looking pretty weak. Now we've got the E-mini S&Ps, they're unchanged. So we've got the NASDAQ up pretty big today, the Dow down big, and E-mini S&Ps kind of sitting right in the middle. It's kind of like your three bears in a sense. And you can see overnight inventory pretty flat today. It is pretty bearish for the most part for E-mini S&Ps. I would say risk to the downside in E-mini S&Ps, and obviously risk to the upside for the tech sector here. All right, you can see Qs moving to the upside. Let's just take a quick flip through some of these retailers just to see these chart setups that we're looking at. You can see with Lululemon here making this nice little toppy pattern with the lining up of these dojis. Now, usually any one of these dojis would look like a topping pattern. They have not gotten confirmed on any one of these three in a row, but we can see that that momentum is really starting to slow here. So a confirmation is what I would be waiting for on this trade. We keep getting these indications, if you will, that we've found a top here, but it hasn't been confirmed yet. And, a pattern like that finishing at the low, getting a nice red candle would start making it look like that was confirmed to the downside. I'm not taking anything on right now for this one, but I am keeping a close eye on it. And another couple of them that look pretty good was, Under Armour confirmation. This is the flip side of what we were looking for. We're looking for a topping pattern here and then a confirmation there, and that's what we're seeing here in Under Armour. So if you wanted to play something like this to the downside, those are the types of setups we're looking for on a swing trade to see this start to roll over. And then XRT is the other side of the ETF for the retail sector. Again, topping pattern, that's what we're looking for. Actually, that one is, we don't normally talk about it, that's actually considered a tombstone. So basically you get a pattern like that, topping tombstone pattern is what you'd be looking for. And then obviously you got the confirmation today. That makes it look like we're at least coming back down to right around here at this point of control. That would be a magnet for this market to want to migrate back down to in XRT. So if you want to play the retail sector or hedge retail sector, XRT might be the one to be looking at for that. Now, CRM, you guys know I played this to the downside. I had bought some puts a while back. The market has started moving against my position. I'm long puts, and you can see no matter where I put this trade on, it has started continuously moving sideways. Now, earlier on today, we were bumping up against this area of resistance, which I'm going to call right in and around that area, is starting to show a little bit of resistance there. So I added some short calls to my long puts. That's kind of creating a bearish risk reversal in this, but because the way that I've legged into this, it's allowed me to get some really good strike location on this, and I'm able to sell the calls at the 260 strike. That gets me above my little 260 here. I've got a Fibonacci and points of control, all of those things are going to be helping out this strategy. Point of control being lower, which would drive this market down, what I'm looking for. And if it starts getting up in and around this area here, it's going to lose some momentum to the upside. You can see in the past, we've had basically a resistance area somewhere right in and around that line in the sand there. So we bumped up against that today. I added some short calls to those long puts that I've had on for a while. Obviously, the long puts weren't working out. I'm trying to stay a little bit mechanical here, lower my overall cost basis by shorting those calls above a nice strike location. Obviously, though, you know, it is in an area of low implied volatility. So normally breaking the rules on my trades for selling calls here. But remember, I'm trying to stay mechanical with a trade that's not necessarily working out great and trying to lower that overall cost basis for it. So selling these calls against my long puts is what I'm trying to do by lowering cost basis there. And then CRM, Lulu, what was the other one I wanted to talk about? XOP is something that, or XOM, all of those energy sectors, you can see nice topping pattern, confirmation today to the downside. So risk to the downside, retail, energy, and travel. I mean, you'll take a look at MGM, big move to the downside today, confirmation on that rollover. You probably could look at Las Vegas Sands, which I haven't looked at, but I'm sure, yeah, again, there, that confirmation to the downside. MGM, I showed Win. Let's take a look at Win real quick. Just being in the in the casino sector, obviously the strongest one at last I checked was Penn, staying above this Fibonacci. So it has found support and resistance there. I am long Penn. I'm going to hold on to this a little bit longer here because we're right there at the point of control, and I think that Penn probably has the best upside potential here, especially with Barstool and everything else. They have their earnings right around the corner. All right, and that's about it. That's all I've done was that CRM. I am trying to, I've got a couple of trades working that are a little bit far away at this point. Toyota Motors has started seeing this start to roll over, very close on this one to be able to cover these short calls in Toyota, and that's about it. Yeah, it's really close on those Toyota short calls. I'm short at the 195. All right, and that's about it. That's all I've got for you folks this week. Make sure you guys are paying attention because we've got some data showing up later on this week that could really start moving these markets. And we're going to be looking forward to the unemployment number on Friday. All right, so that is going to be key for the directional move for the rest of July. All right, so that's going to really be a sentiment maker there because I think most people are waiting with bated breath for that number on Friday. All right, that's all I've got for you guys. You know, like I said, remember, subscribe so you guys get access to this. You'll get a notification when we're kicking off on weekdays. I'm trying to do this at around 11:30 Eastern, and then we do Thursday webinars where it's right after the close. We're going to drill down on different option components, and we're going to show you when, where, and why you would use a specific strategy for any given directional assumption. That means like a bullish directional assumption. We aren't always just picking a long call. It doesn't always fit for that directional move because we have to look at the pricing, and that's what I show you how to spot whether or not pricing is expensive or cheap in these webinars. So that is key to your success going forward. All right, that's all I got for you guys other than, you know what? Smash that, hit that. Bye for now.